Bom dia, and welcome to Move to Portugal Daily, episode 124, 2026-0510. I'm Mateus Casta with the Portuguese Pride Network. In the next 10 minutes, I'll give you exactly what you need on Buy Smart, 3 property ownership strategies to lower Portuguese property taxes and protect your residency. Let's run the numbers. Picture a $500,000 Lisbon flat. Are you paying $500,000 for the bricks and tile, or are you paying closer to $520,000 plus recurring annual costs when you add taxes, IMI increases, and administrative fees? That difference matters when you're budgeting for residency, NHR tax planning, or golden visa thresholds. Here's the promise. Today, you'll get 3 realistic ownership routes: personal ownership, a Portuguese LDA, limited company, and fractional or co-ownership, with concrete euro examples for Lisbon, Porto, and the Algarve. I'll show typical closing costs, annual IMI exposure, where taxes can surprise you, and the single best next step you can take after this episode. First, personal ownership, the simplest route and often the best for someone who plans to live in the property. Let's use a €500,000 Lisbon apartment as our worked example. Expect closing costs roughly €15,000 to €25,000, legal fees, notary, registry, and IMT and stamp duties, depending on your exact situation. Annual IMI, municipal property tax, for central Lisbon apartments in that band is commonly in the €600 to €1,200 range, though premium locations and revaluations can push that higher over time. For residency implications, owning in your personal name supports a D7 application because it shows ties and a residence. It's straightforward evidence for habitual residence if you plan to live there. For golden visa routes, note that program rules have changed in recent years, and eligibility for property routes can be policy sensitive. Personal ownership may or may not meet specific golden visa thresholds today, so check the exact program parameters with counsel before you commit. Above all, label these numbers estimates and confirm with a lawyer or tax advisor. Second, buying through a Portuguese LDA, useful for professional landlords or owners who want corporate separation. Example, a €350,000 Porto apartment purchased by an LDA. Initial corporate setup and notary costs are modest by real estate standards, roughly €1,500 to €3,000 to set up the company and transfer documents, but annual accounting and compliance will run about €1,800 to €3,000 a year, depending on complexity. Company ownership can change tax signals. Rental income will be corporate income, subject to corporate tax and potentially different social and VAT considerations. That can trigger IFCI and other reporting obligations for non-residents. It also creates a paper trail that may complicate NHR entry if your personal taxable situation looks like a business. Regarding golden visa, some corporate ownership structures have been treated differently from direct ownership. That's a legal detail to verify before you elect the LDA route. Do not assume an LDA is a pure tax dodge. It's a structural choice with costs and responsibilities. Third, fractional or co-ownership. Popular in the Algarve for holiday units and for buyers who want lower capital outlay. Take a €250,000 holiday unit where you buy a 50% share. Your cash portion is €125,000, plus your share of closing costs and a management setup. Realistically, you should budget a few €1,000 in immediate fees and a short reserve for shared maintenance. Expected rental income for a 50% share in a well-located Algarve property can be €8,000 to €12,000 per year, but that's gross and depends on occupancy, seasonality, management fees, and licensing. A major risk for holiday co-ownership, AL, short-term rental, licensing and municipal enforcement. If the unit loses its license or the municipality changes rules, revenue drops fast and your residency evidence can be weaker. As for D7 income proof, fractional rental income can help, but immigration teams want stable, documented income streams under your name or clearly attributable to you. Shared accounts and informal splits often don't satisfy them. Treat co-ownership as a part-time income strategy, not a guaranteed residency backbone, unless you structure it carefully. Now 5 concrete action steps you can take this week to avoid expensive mistakes. 1. Due diligence on the property and confirm the cadastral value and IMI history. 2. Book a consultation with a Portuguese tax advisor who understands NHR and IFIC implications. 3. Budget for immediate closing costs and an annual IMI buffer of at least 20% above your estimate. 4. If you plan rentals, verify AL licensing and municipal rules before signing. 5. For any corporate or co-ownership route, insist on a clear, lawyer-drafted shareholder or operating agreement that sets revenue splits, maintenance contributions, and exit terms. Common mistakes I see that turn a $1,000 tax into a $10,000 surprise. Underestimating IMI revaluations, skipping a tax review for company ownership, assuming rental income will be steady year to year, ignoring local licensing for holiday rentals, and using informal co-ownership agreements with no exit clauses. Each of those is avoidable with a short checklist and the right advisors. Listener question of the day. Should I choose personal ownership or an LDA if I want NHR benefits and plan to apply for residency? Quick checklist. If your plan is to live in the property, declare it in your name, and keep income simple, personal ownership is usually cleaner for NHR and residency documentation. If your goal is a rental business with professional management and you want liability separation, an LDA can be appropriate, but only after a tax simulation. Tactical tip you can use today. Ask your tax advisor to run a 2-year projection comparing net cash flow and tax under personal ownership versus an LDA. That projection almost always clarifies the right route. Final CTA. Download the Portuguese Pride Network ownership checklist to get the model worksheets I mentioned, closing cost templates, IMI calculators, a simple LDA cost model, and a sample shareholder agreement. Visit nomadlifesuccess.com/ownership checklist to grab the packet of templates and a vetted list of lawyers and accountants. If this episode helped, subscribe to Move to Portugal Daily, new practical guidance every weekday. That's your move for today. If this helped, hit subscribe on YouTube and follow on your favorite podcast app. For more information, visit nomadlifesuccess.com. This is Mateus Costa. Saúde, and I'll see you tomorrow.